Hi there, welcome to Kneppy Invest and welcome to February 18, 2025. Today is quite notable for me personally because I put a deposit on some land out in southwestern Brisbane. It's about 25 to 30-minute drive from Brisbane CBD, so not in Brisbane Council. In fact, I think it's in Ipswich Council, a new neighbourhood, all new buildings, and I hopefully should have my house built by the end of this year. Perfect timing because I'm on 1 year's leave in just about a week. Yes, exactly a week. I'll be on 1 year's leave and I can do whatever I want in that 1 year. Sell it. I've sold this house. I'll be moving out of this house within the next few months. And then I can travel overseas, live with my parents for a while as my house is being built in southwestern Brisbane. In fact, it's called White Rock. White Rock, a new development. I love the area. A lot of trails just nearby. And again, not far from Brisbane. In fact, you could just hop onto I think what highway it's called, some highway, and it takes you straight into Brisbane. Anyway, so I did that this morning. I have to pay a pretty penny to pay a deposit for the land, but that's okay. I have a fair bit of cash on me right now. Not on me personally, but you know what I mean. Anyway, so today was also important for the nation because interest rates were cut. Now, first time since 2020 as per trading economics, but it was expected. Everyone expected interest rates to be cut. I'm not sure how the market reacted, by the way. I would have thought maybe the market would be sort of nonchalant about it because I expected it. But I do notice our market is down today. I'm just interested to see if there was a negative reaction at some point. In fact, we'd probably be able to see this just via XJO and TradingView. What time do they usually release it? Probably 11 a.m., something like that. So you have a look at the 1 minute chart. Do we see any significant dip? Oh, so it looks like they released it at 1:30 p.m. And the reason I say that, you can see a massive amount of volatility at that point in time. You can see it going up 0.17%, and then it just dropped, and then it rebounded back up. So I would assume that the interest rates call was made at that point in time, or maybe it was, no, it wouldn't have been made there. Anyway, in fact, our market opened up initially. That's interesting. Yeah, anyway, so you can see the reaction from the market. I'm not sure why there was reaction because this was expected. I would have thought maybe 90% chance rates were cut. So we got it. So this should not have been a surprise. So I'm a little bit surprised we did see that little bit of volatility. So I suppose that's the only surprise. The surprise that there was a surprise. Anyway, so that's the interest rates. They've been cut. There was some interesting commentary from the Reserve Bank, and that could have led to the volatility, maybe. So they mentioned here in their statement, underlying inflation in year-ended terms expected to return to the 2 to 3% range earlier than previously expected, but to settle a little bit above the November forecast. So some positives, some negatives there. If the cash rate follows the market path, which of course it won't, we have taken some signal in the near term from the weaker than expected December quarter inflation outcome, which may indicate more spare capacity in parts of the economy than previously judged, such as in the new housing construction. However, and you know, whenever you see the word however, something negative is going to come. However, the central bank is now for the central forecast, not bank, is now for year-ended underlying inflation to be a bit above the midpoint from late 2025 onwards, rather than for inflation to gradually moderate to the midpoint as was forecast in November. So it is slightly negative. They expect inflation now to be a little bit higher than previously thought. Now, maybe that is what caused a little bit of volatility when they did release that statement. I think we can get rid of capital brief. No, we won't. Anyway. Oh, look at that. Judo Capital share surge on a 70% rise in half-year profit. I might talk about Judo Capital later in the video. A plethora of a plethora of results were released today. And when I say a plethora, I mean a lot. I do tend to write them all down. And I am seeing 7, 14, 21, and there would have been quite a few announcements or results released after 10 a.m. And I can check that right now. For instance, Hum released their results at 9:59 a.m. I did not have a look at those results. I did have a look at XRF Scientific. I do own shares in that company. And so I was very interested to see how the market reacts. Share price up 5%. In fact, I did not even, I did write down XRF, but I did not write down hum. So that's the one I write more down. So hum is the last one. Actually, XRF is the last one I looked at. So any release of announcements or results after XRF I did not read. So hum, share price is down. What else do we have here? I could easily filter this, but this is what I do every single day. Company called Ignite. I don't know anything about this company. Markup $13 million, share price up. Maybe I should have a look at that one. They released results. Select Harvest had the AGM. And what else? Babylon Pump and Power released their results. And Bell Financial, I'm interested in that one, share price down a little bit. Anyway, and Altura released their results as well. Looks like. Oh, no, results date and preliminary results update. Narada, don't really care about that. They're a pharmaceutical company without any profits or selling anything. Anyway, so a lot of companies release their results, and I don't know how I'm going to go through these. What I might do, I haven't got a top 5 stocks at this point in time. In saying that, I do have a top stock of the day, which is a company called BSA. Obvious choice for top stock of the day. Share price down 80%. 80%. It's just an obvious choice. Nothing I should mention. So don't have a top 5 stocks. So I'm not sure how I'm going to go through any sort of the results because I haven't really seen how the market has reacted for many of these companies. So I might be missing one or two. So this is going to be more of an ad lib ASX daily rundown video. But before we have a look at the ASX today and go through all that, I should just mention a few things I missed yesterday. First one is FBR. Share price down, what was it, 43% yesterday, 14% today on the joint venture option period concludes, and whoever was a part of this joint venture option, whoever was the other party, have decided they're going to step away, I think. And that's why the share price is down significantly for FBR. And that is a problem for these type of companies. Still a story stock, and all it takes is one negative thing and the share price can tumble over 50%. And if you have a look at the daily chart for FBR, it's looking pretty bad. So look at the big volume coming as well. So there is a lot of risk in these sort of companies, and I'm trying to limit my risk, which is why I'm not that attracted to these sort of companies anymore. You might miss some upside, but I think you miss a lot of that risk as well. So I think it all depends on your risk appetite. But that's one of the reasons why I'm staying clear of these type of story stocks. So that's FBR. Another thing I missed yesterday, A2 Milk. I did not see that A2 Milk have announced their initial, what do you call it? Their first ever dividend. There's a word for it. There is a word for it. Their virgin dividend. I don't know what you call it. Not a virgin dividend. Their initial dividend. There is another word, but anyway. So initial dividend for A2 Milk, and it just shows you that I'm not really seduced by dividends. I don't really care about dividends. In fact, ideally, I prefer any company I invest in not to provide the shareholders with too much of a dividend. I don't mind a token dividend, but not too much. I rather the company use the money they create in the business to try and grow even more. Exactly what Warren Buffett and Berkshire Hathaway do. They don't give their shareholders a dividend, 1 cent, because they know they are better capital allocators than their shareholders, and they can provide their shareholders with much better capital return on those profits than what the shareholders can do. Anyway, that's why I'm not a big fan of dividends, because I believe the company should do a better job turning that dividend or that money into greater growth in the future. But I can understand why some people are seduced by dividends, because some investors need an income, which eventually I will need an income, and then my strategy will change. Right now, I don't need to change or go down that path. Anyway, so A2 Milk now is a dividend-paying company, first time in their life. And the other thing I missed was Smart Parking. I didn't miss this one. I did see it. And I went quickly through their results, and I was like, ooh, the results are pretty good. But they also went into a trading halt because of an acquisition. So I completely missed it because the share price wasn't up or down because shares are not trading. The results looked really good. I like these results for Smart Parking. I can't remember now because it was yesterday, but on first impression, the results are pretty good. Not sure how they compare to expectations, but revenue up 20%, profit up 70%, and net profit for the period attributable to members up 101%, and net tangible asset backing per ordinary security up from 5.83 to 6.1 cents. And that is all I went through, because then I noticed they were in a trading halt. Anyway, so smart parking is another one I missed yesterday. Okay, on to the ASX today. And no, I was going to go straight to top gainers. I suppose I could do that. A negative day today. Interesting enough, our market did open up, or did open in the green, and we've seen it drift lower through the day. So that's when I was out signing my contract. So maybe that's why the market was drifting lower, because it just knew I was not paying attention. Everything revolves around me in the world. Who knows? Maybe it does. Maybe this is a simulation. And right now I can't see anyone, and maybe you don't exist right now. Anyway, sectors, healthcare's had a good day. In fact, I'd say probably healthcare's is the only sector's had a good day. You could say IT's up a little bit, but energy, woof, woof. Financials, woof, woof. And discretionary, ugh. What's happening with energy? So oil prices down. Let's have a look. I didn't really pay attention to the overseas markets last night. I can't even tell you what happened on Wall Street, which usually doesn't happen because I was so excited about doing other stuff. So, in fact, let's have a look at Wall Street overnight. So, NASDAQ was up. Was Wall Street open overnight? That looks like it was very similar than what we saw on Friday's session. Was Wall Street open overnight? Well, according to this, it wasn't. What was the holiday in America? USA holiday. What would it have been? 17th of February, President's Day. We should have a Prime Minister's Day in Australia. We should have a Prime Minister's Day in Australia. I'm telling you right now, we should. If they have a President's Day, we should have Prime Minister's Day. Or maybe a Premier's Day. Anyway, so yeah, I was going to say NASDAQ was up that exact amount on Friday, and Dow Jones was down that exact amount on Friday session. So they had a public holiday. There you go. I had no idea. I can just see how much I've been paying attention. Anyway, so why is energy down a fair bit? Let's go have a look at oil. We can have a look at oil. Oil is not on holiday, and oil not much. I don't know what's happening with energy. Let's look. And Woodside down, Whitehouse, oh, coal. Looks like coal. Yeah, definitely coal. Coal and a bit of uranium in there. Okay, so coal and uranium. It's pretty obvious, hopefully it's obvious why I'm saying those two, because Yancoal's down 2%, Whitehaven down 4%, New Hope down 3.3%, coal companies, and then we have uranium. And if you have a look at uranium, Paladin down 3.5%, Boss Energy down 3%, DPLO 1.8%, NextGen down 1%. Yeah. So a few commodities down fairly big. And if we go back to looking at coal and what was the other one? Uranium, they must both be down. Now, uranium in itself is looking really weak right now. So yeah, it's been looking weak for a while, and it just continues to go down. I have no interest in uranium right now. I do know there's still a lot of investors out there and analysis who are very excited about the long-term potential of uranium, but short-term, price of uranium is in a downtrend. And coal, where's coal here? There it is there. And coal is still collapsing, still dropping like a rock. Anyway, so interesting, energy. And I would assume financials is down because of the banks. ASX 20 down 0.59%. Are the banks down? Let's have a look, see. I thought the banks I suppose if interest rates cut were expected, that would have been priced into the banks. I was going to say maybe the banks could have gone up because of interest rate cuts, but not if it was expected. So ANZ, in fact, let's have a look by market cap. Yeah, so CBA down 1.32%, NAB down a fair bit, Westpac and ANZ. So a couple of days where the banks have been weak. CSL, go CSL. Let's have a look at CBA. Is there any reason to be concerned if you are a CBA trader? Not really. Not really at this point. I wouldn't be concerned about this. I wouldn't be buying right now CBA shares. They're way too expensive. But if I was trading it, or if I've held onto CBA shares for 2 decades, I wouldn't be selling either. I should always mention that if have been holding Commonwealth Bank shares for a long time, I wouldn't be selling. Probably the same thing is true if I held BHP shares for a long time. Yeah, I wouldn't be selling these because you'd have to pay some tax if you sold, and then your dividend yield on your initial capital is probably quite good. The only reason I might sell CBA is if I really expected it to drop to say $100. And I'm not sure if I fully am confident in that proposition. Okay, so let's turn our attention to the top gainers. This is where it might become a little bit exciting because I don't know anything here. A company called Diablo Resources, again, maybe a bit of a homage to a video game. Isn't Diablo a video game? I'm not a video game person, by the way. I did know this was a video game, and I've been wondering whether mining companies do get named because because the person who names it might be a Star Trek fanatic or a video game fanatic like Diablo, or maybe a heavy metal fanatic. Because I have noticed there is a bit of theme, like Diablo Resources, the Metallica Resources, or there was a Star Trek one not that long ago I was looking at. Anyway, Diablo share price is up 50% on what? We don't know, DBO. And near high grade, near mine copper project. New high grade, near mine. I don't mind that word, near mine. What does that mean, near mine? New high grade, near mine. Does that mean this high grade copper project is near a mine that's already in production? Is that what it means? I don't want to delve too deeply into this announcement because I want to move on. But I'm wondering, and the other thing is I'm not that attracted to these sort of announcements. But let's have a look at the chart. Oh, look, the selling coming in. No interest in this. And the main reason no interest in this, even though share price is up a fair bit, is the amount of selling. Share price is high as 4.2, and it's now down to like 3 cents. So again, no interest in this particular announcement. And hopefully it's understandable why the share price, or there's been a fair bit of selling, because there's been a fair few shareholders in this company who bought at high prices. And they saw the share price pop up and they went, now's my opportunity to sell. And they've just tried to sell their shares en masse. And that's what's happened today with Diablo Resources. Okay, that's what I'm going to talk about when it comes to top gainers by percentage change, because I think I have a lot to get through. Let's have a look at the top gainers by market cap. And we're going to see a lot of companies who did release their results today. Hub24, HMC Capital, Judo Capital, Monadelphous, all released results. Hyperion did not. Ordinate released results yesterday, but upgrades. A lot of times you'll see that when a company releases their results, the next day you'll see upgrades. And I think there's been quite a few upgrades for Ordinate, at least 2 that I remember. Well, 1 at least. I'm pretty sure there's been 2. A2 Milk, there was quite a few upgrades, including Macquarie. They upgraded A2 Milk, but you don't see A2 Milk here. Sinlane Milk keeps on going on a tear. Stein Entertainment Group, a little positive reaction from yesterday. And what else do we have here? Findi, more positive reaction. And to be honest with you, that's it. SmartPay, maybe that's rebounding because of Tyro. Well, that's it. So it's really those first 4 who did release results. So Hub24, HMC Capital, Judo Capital, and Monadelphous. I own 2 of these. Used to own Hub24. Then I sold stupidly. Stupid decision. HMC Capital is more of a long-term. Judo Capital is more of a trade. A bank with growth. That's how I describe Judo Capital. Let's have a look at the chart for all these. I did not go really quickly through their results. In fact, I can't remember. I do remember looking at Judo Capital and thinking, "Oh, they're pretty good," but don't want to bore you with trying to go through the results and try to decipher. I didn't have time this morning, so the most important thing here is how the market has reacted to these results. Now, it could be the results beat expectations. In fact, I can tell you right now, I do have a website open which does compare or tell you some indications of how these results compare to expectations. For example, Hub24 was as high, it was up as much as 13.8%, by the way. So revenue was a beat. This is via market index. Revenue a beat, EBITDA a beat, and adjusted NPAT a miss and dividend a miss as well. But they also upgraded their funds under management guidance. That's important. So they've upgraded and they've also had a few beats in there as well. So that's the reason why Hub24 has rallied today. Let's have a look at the chart. Oh, no, before we do that, what I'll do is I'll just go through quickly through this. Oh, Monadelphous is on market index. Yeah. The result was largely pre-guided from a trading update on 24th of January. And this is interesting. I've noticed this a few times when a company might produce an upgrade and then they hit the results on when they release their results, share price still rallies. It doesn't understand me. They haven't released any new information, yet the share price rallies. So I do think on occasion, many trading or upgrades can be missed by large portions of the market. And that's why the share price of Monadelphous is up, because even though the news was out there, some people didn't realize it. Anyway, so what else do we have here? HMC Capital. Oh, we've got them all here in market index. Yeah, so Judo Capital, apparently their pre-provision profit was a miss. Cash earnings, 13% ahead of consensus. Net interest margins below consensus. And net interest margin guidance upgraded. So upgraded there to upper end of 2.9 to 3%. Okay, so that's Judo Capital. And HMC Capital looks like that was better than expected as well, with pre-tax earnings per share 51.9 cents. But that estimations there, the estimates there were 37.4 cents, and those estimates were via Jarden. So it looks like HMC Capital also beat estimates and no mention of any sort of guidance there. So what I'll do is have a look at the charts for all four of those companies. So let's start off with Hub24. This is a brilliant looking chart. And if I had to talk about any mistake I've made in the past few years, it's been selling Hub24 to take profits. And when I look back on it, I've been thinking, why? Why did I do that? So I actually bought Hub24 on a breakout, a beautiful breakout. It was a perfect breakout on the 22nd of August, 2023. So we're talking about 18 months ago. It was the most perfect breakout. And look at that. Share price actually dipped back to the breakout level in October. So 2 months later. And the share price moved into an uptrend, just trending up. And then I sold somewhere up here. I wasn't at 100% gain. I can't remember why I sold, but I sold and the share price just kept on rising. No reason for me to sell. A mistake has learned. The mistake I have learned. There was no reason to sell, and I'm trying to keep to that now. Even though I might want to sell, take profits, if there's no reason, the chart is telling me no reason, don't sell. Except if it comes to valuation, that I don't know. Yeah, and you could argue Hub24 looks so expensive. What's the PE ratio? Probably 150. 100, at least 120. P ratio 144. Yeah. So it doesn't look very expensive, but just look at the chart. What else do we have? Monadelphous. This chart looks really good as well. So this one broke out back in early December. I saw this breakout, did not play it. Am I agreeing that? Not really. I'm not a big fan of this type of company. Have you had a look at their results? Like the revenue is like $1 billion or something like that. What's their revenue? In fact, in market index, they don't even talk about the revenue. It's about $1 billion and their profit was like 40 million. So this company is existing on very low margins. So if the smallest thing goes wrong, their margins are going to lower and their profit is going to take a massive hit. So if you have a look at their media results, yeah, revenue $1.05 billion and profit of 42.5 million. So really tiny margins. So Monadelphous, but the chart looks pretty good. Chart looks good. Share price at looks like maybe almost a 5-year high. So chart looks pretty good, but 5-year high for Monadelphous. HMC. No, actually, we'll do the other one first. No, Judo Capital first. So I am trading this. In fact, I bought Judo Capital back in January of last year, and then I sold May, and then I bought back in. The reason no, actually would have been a little bit later than May. Share price was going sideways, and it was going in a channel, and I decided to sell because you can see it perfectly in a channel. And the reason I sold was because I didn't know which way the share price was going to go. It could go higher or lower, or above or below the channel. So I thought, I'll just sell and put my money to use elsewhere, and then I can buy back in if I see a breakout. And that's exactly what I did. So my plan was perfect. I bought on a breakout. You might say, oh, not a good plan because you bought back in at a higher price. But I'm de-risking. What I'm doing here is de-risking because there is a chance the share price might go below the bottom of the trading range. So I'm just de-risking. And when I bought on the breakout, it's a lower risk. You've entered it at a lower risk. And even though it's at a higher price, there's lower risk. And since then, there's been no reason to sell. And today, the share price has reached a long-term high, if not an all-time high. Oh, a long-term high, not quite an all-time high. So chart for Judo Capital looks good. Has been a little bit of selling today, but that's okay. And the last one is HMC. This is a longer term position for me, an alternative asset manager. Got their fingers in many different pies, including real estate, data centers, and all this other stuff. Anyways, and energy, renewable energy, that sort of thing. Anyway, share price took a bit of a hit back in mid-December because they spun out the infrastructure REIT. What's it called? Digico infrastructure REIT. And when this particular REIT was listed, the share price plunged, fell a fair bit. So that was this 13th and 16th of December. And in fact, if you have a look at HMC on the same days, the share price of this particular company or asset manager dipped a fair bit as well. So the market was just, I don't know, it was just pricing in the drop in Digico infrastructure REIT. Share price has stabilized, and today's share price has bounced on the release of the results. A bit of a doji forming there, so a bit of a battle between the bears and the bulls. Sort of I can understand that. I think the results were pretty good. And of what I looked at, didn't go that in depth, but a fair few investors did buy at higher prices. So that's the sellers, those who bought at higher prices, and the buyers are buying in because of the results. That's what I'm thinking. Overall, the share price on the chart looks pretty good. There was a couple of crossovers, but that's okay. We've crossed back over. I don't mind this chart. But this is more of a longer-term position for me. Okay, so those are the top gainers. That's all I really need to talk about. I could talk about Audinate, Synlait, Milkstar, but I can move on. Oh, Mega Metals is there as well. Go Mega Metals. Anyway, so let's have a look at the top losers. And at the top, no surprise, BSA. Share price down over 80% on losing. Looks like a contract with NBN. And this particular relationship with NBN accounted for 80% of BSA's revenue. However, when the share price was down at 10 cents, the markup of this company was something like $7-8 million. And I thought the market was overreacting. I just couldn't buy. I just couldn't hit the buy signal. And that was in the first 15 minutes of trading. And I wouldn't say I'm regretting that, but it would have been a good decision because share price has increased from 10 cents to 17 cents, which is a 70% rise in share price in a fairly short period of time. And that is the sort of thing that can happen when you see the market reacts like this. But there could be further downside. Could be further downside at that point in time. So there is a bit of risk there. Other than that, a company called All Cyber did release some sort of update, but I don't really care about that company. Heartland Group. Oh, Heartland Group and Resimac both released some sort of update. I didn't really take a close look at either. Yeah, their market update increase in HBL New Zealand impairment expense. I'm pretty sure this is some sort of bank, but I don't know that much about it. So let's have a look at the chart for Heartland Group. Oh, the chart looks ugly. If this is a bank, it's probably the ugliest looking bank in history. And I'm being a little bit facetious when I'm saying that, a little bit dramatic, because if you compare this to, say, the Australian banks, they're all looking good. All looking good. And the other one was Resimac. Resimac, it was, what was it? It was some sort of trading update. It was a trading update, yeah. And it was negative. I was trading this. I'm out now. Share price up to 96.5 cents. So share price has recovered a fair bit from the lows, which is 84.5. So maybe again, the market has overreacted, but that's okay. So it was it was I would call it a negative trading update, but there was a little bit of positive in there. So I'm not surprised to see the share price drop a lot and then recover because that's sort of what I saw and read fairly quickly. So let's have a look at the chart for Resi Mac. And we have seen a bit of a bounce today. That's really nice. And the share price has bounced off a support level, which is above about 84 cents. So, and pretty big volume coming in. But I wouldn't say, I think this is very close to an uptrend killer. In saying that, the uptrend has only been in place for a few months. So it could go either way from here. And that's the main reason I sold it. I could see going either way from here, up or down. Anyway, so at least I didn't sell at the low. So I sold well above the low, by the way. What else do we have here? And that's about it. There we have FBR again. Let's have a look at top losers by market cap. And we have Pilbara Mineral Resources. Mineral Resources? I thought they were supposed to release the results today. No. Okay. And I'm pretty sure, where is it? Pilbara did not. Where is it? Here we go. Challenger. Oh, Challenger did release results. I had a look at Challenger results and I thought, oh, they're not that bad. I thought they were pretty good. And I am wrong sometimes, completely wrong. For instance, another company I thought released good results, Reliance Worldwide Corporation. I put a tick there. Share price down. SRG Global. I thought they released a really good announcement, including an upgrade. Share price down. I might have a look at those two companies later for a second. Anyway, so I thought Challenger's results were pretty good. Share price down. I'm just going to see if it's in. Oh, yeah, Challenger shares fell following release of its half-year results, despite a 12% increase in profit after tax of 225 million. The company's statutory net profit after tax of 72 million and a weaker COE margin disappointed some analysis. There you go, normalized statutory. So a little bit of disappointment from analysis, but I thought it was good. And this is another reason why I try not to react upon my own thoughts. Get the feel of the market. And we've seen that really highlighted today because quite a few companies I thought released really good results. Share price is down. Chart for Challenger doesn't look any good anyway. Now, in saying that, I do have this support level at 550 and the share price has bounced off 550 quite nicely. So that could be a nice little buy price for Challenger. In fact, that goes all the way back to 2021. Share price of Challenger has been trading in a channel for about 4 years. And yeah, $5.50 could be a nice price, but not much upside if it just continues trading in this channel. So that's Challenger. I noticed on Bapcor, I didn't understand why share price is down 7.84%, but I've just read here in Market Index, the CFO tendered his resignation to pursue an opportunity external to the company. And the market sells before asking questions. And that is true for Bapcor here. Share price down a fair bit because of this resignation. And the market's thinking maybe something's really bad happening with the company. I've got to sell, got to sell, got to sell. And the chart, well, funny enough, the chart was starting to look interesting before this day. Other than that, nothing there for me. We also have Heartland Group. I talked about that. McMahon released results, share price down 6.8. I don't think this one is that interesting. McMahon, a mining services company. Oh, that's right. I remember this chart. A nice looking chart, share price starting to roll over. So you can just sort of see share price going up and then starting to roll over. And I think the good definition of starting to roll over is each new high is lower than the previous high. So starting to even each new low is lower than the previous low. So we started to see the share price moving into a downtrend. And we've also seen the moving averages cross over. So the market, I suppose you could argue, was expecting this. What else do we have here? Resimac, OFX Group, no. Oh, MLG, yeah, down 10.87%. That company definitely released their results. And on first look, I was like, ooh, not good. So at least I got that right. MLG Oz, and the chart is doing nothing for me. Now, in leading up to these results, however, we can see the share price taking off. So there is a possibility the market thought, oh, MLG's results are going to be quite good. And then today, upon the release of results, those people who thought that went, oh, gee, I was wrong, and I'm going to sell. Anyway, so that's MLG, and I think that might be it among these lists. Yes. Okay, let's turn our attention to a few other companies that did release results that I haven't talked about. Now, before that, there is a company called Turner Automotive. Who's heard of this company? Now, I have heard of it, but I've never looked at it. And the reason I've heard of this, have not looked at this company, they did release an upgrade. And this is a sort of announcement that I will always pay attention to no matter what. So I did that with Turner's Automotive. I went, oh, they've upgraded their profit guidance. The share price should pop up. And then I had a look at the depth and I was like, oh, okay, no. There's only two buyers, no sellers. So if there's no sellers, if you want to buy shares, you can't buy shares. And not only that, the volume of shares they want to buy is only 14. So we're talking about $60 worth of shares. Last time shares were traded were the 21st of January, so almost 1 month ago. And in fact, the whole trade history of the last year is not that long. So there's no reason to talk more about Turner's Automotive, even though they did release a profit upgrade, which is my favorite type of announcement. So sort of disappointed that bad things happened there. No, I said that wrong. I have no idea my train of thought at that point. Okay, so BSA. I think I've talked about BSA briefly. Share price down 83.84% on announcement titled New NBN Co-Field Services Contract Update. They tendered in this contract, which I think they already had, and NBN have told them they won't win the contract. And this was 80% of this company's revenue. Now, this company has a lot of revenue. We're talking about $320 million of cash receipts. So that is, what's that? 1032 times 8, 240, $256 million of revenue just out the door. So they do have maybe $70 million of revenue that's not NBN related. But what's their profitability going to be like? Maybe the margins will improve. Don't know. But yeah, a lot of problems with this company. And this does highlight the problems of buying a company who has a concentrated client list. This is really highlights, showcases the problem. We saw this with Appen a few years ago when they lost that client, Google, whatever. Anyway, so that is the stock of the day, BSA. Okay, some of the other results today that I haven't touched upon. Reliance Worldwide Corporation. I thought these results were quite good. Share price down 4.56%. Let's have a quick look at the chart. In fact, I'll just go and focus on the charts for all these companies. Anyway, so the chart, nothing here to see. Who else released results? Oh, SRG results were good. They also upgraded their expectations for the rest of the financial year. Share price opened up about 5%. And then for some reason, there was a bit of selling. I'm not sure why. It could have been panic selling. I don't know. Could have been some stop losses hit. So the selling started almost immediately and has stabilized since then. I don't know why there was a lot of selling because this is a sort of announcement I am looking for, an upgrade. Good results. Maybe the results were a little bit weaker than expected, but the company issued an upgrade. And usually we'll see the share price rise. This could be just someone dumping shares on the market. It could be a fund manager just dumping shares on market. And when they dump shares on market, there's not enough buyers to sweep up all those shares that are being dumped. And that's why the share price can fall fairly quickly. Other than that, share price has stabilized. So yeah, I think this was a good result from SRG. No reason to panic. In fact, I thought this might be the stock of the day. That's how I thought the results were, or how good the results were. BHP released results. I would assume the market expected what they delivered, and share price is up slightly. Nothing to write home about. SG Fleet results were meh. I'll just say that. I wasn't particularly interested in this company, and there is a takeover bid for this company, so let's move on. Who else? Oh, Deterra royalties. So there was this fear that their dividend payout would be 50%. They've come in at 75%. The dividend payout ratio is a minimum 50%, and they've come in with nice dividend. I think most metrics were down, but fact, this chart is starting to look interesting. Now, a bit of selling today, but we have seen, actually, I should say, a bit of buying today because the share price was down as low as $4. Let's just have a look to see if the low was reached in the first few minutes. Yes. Yes, within the first 30 minutes. And the share price has stabilized. Anyway, so chart actually doesn't look that bad for Deterra. We also have Baby Bunting. I had no thoughts about this one. I thought it was okay. No positive or negative, and share price is flat. There you go. Neither positive nor negative. BRI, which is Brisbane Industries. The results were pretty bad. The underlying numbers were pretty bad. No, it's Big River Industries. Did I say Brisbane? Big River Industries. What am I thinking about? Chart looks horrible. Share price down 2%. No reason to be in this one. Seek. I thought these results were meh, and share price up a little bit. Bit too much volatility in the share price. There's just, yeah, I'm not keen in that chart at all. What else? Biome. So I'm actually skipping a few now because I'm taking too long. Biome release results, share price flat, slightly profitable. And Infomedia doing a share buyback, this one. So they obviously think the company is undervalued. Not much growth in terms of revenue. And if you have a look at the chart, not interested in that chart at all. Dexis, I don't care. MLG, ARB. This one is I'm interested in. We did see a bit of a decrease in revenue and profit, maybe. And this company is, I would suggest and argue, highly overvalued. And share price is up. There you go. Share price. Share price had moved in, or the chart had, or share price had moved into downtrend. So a little bit of buying has come in today. P ratio of 30.76 for a company. I suppose there is a bit of growth here, but I'm not sure if it really justifies that sort of market cap and that P ratio. So if the share price did drop a fair bit from here, when I say a fair bit, I don't mean all that much. I think this company would look a little bit more attractive. I suppose that can be said for any company. And finally, XRF. In fact, this was the last results I did look at. I was a little bit concerned as a shareholder. The reason I was a little bit concerned about this one is simply because the growth in revenue was not that good. It was up, but I want to see really good growth in revenue. So revenue was up. What was it? Where is it? This is not what I looked at. I must have looked at the Appendix 4D. Yes, so revenue up 0.3%, but increasing margins means EBIT, profit both up by significantly more than 0.3%. But again, margin expansion can only happen so long. I would like to see revenue growing. But it seems like the market has liked it. Share price up 5% and has reached a new all-time high. And really good volume coming in as well. So not complaining about this one. This is one I own, am trading, and that's me buying a few years ago at $1.05. So almost double, almost up double for this one. And that's it for all the announcements today. Oh, I might have missed one or two, but I think that's it. So let's have a look at some of your comments. I have a little bit of time on my hands. Dimitrix, thoughts on Aristocrat? High quality company, yes. Expensive, yes. All-time highs, yes. Holding and waiting for some selling. Okay, so I do own Aristocrat. I bought when it was cheap. So doing the old-fashioned thing of buying companies or good companies when they're cheap. I do not understand why Aristocrat was so cheap when I bought back in October 2022. So I'm double this position. At that point, I was like, I should buy Aristocrat here. P ratio was like 14. It's like, why? And then someone told me, well, it's because a company like this has a discount because of ESG reasons. But then why has the share price just gone bonkers over the past 9 months? Yeah, the share price has gone bonkers over the last 9 months. So in May last year, the share price was $38. Now it's 78. So it's more than double. This is a case where I wouldn't be disinclined to take profits. When I say take profits, I wouldn't say selling all of my holdings in Aristocrat. It would just be halving it because of valuation reasons. But the share price could keep on going up. So I'm not, I could be definitely influenced to go down that road. I'm definitely thinking about not only for Aristocrat, a few other companies in my portfolio, including Pro Medicus. Will the share price drop? It could. It could. We have seen that before. Look at this nice little run back in. It does it all the time. Share price goes on a run, then pulls back, goes on a run, then pulls back. If you have a look at the weekly chart and just put in the 200-week moving average, and you can say, yeah, this is I like the 200-week moving average for Aristocrat. It's been generally above this moving average since 2013, so over 10 years ago. And whenever the share price drops below the 200-week moving average, now this is a Charlie Munger thing, buy high quality companies when the share price gets near the 200-week moving average. And if you follow that sort of principle with Aristocrat, you've done fantastically well. And right now, the share price is well above the 200-week moving average. So if the crap hits the fan, share price of Aristocrat could fall all the way down to $46 and still be above the 200-week moving average. So there is a significant downside at play here if sentiment starts to turn negative. So that's definitely something I'm thinking about taking profits with Aristocrat. Scott says Monday was interesting for Money Meet intraday. 1,059 shares traded over and over. Any idea what that's about? Let's have a look. That's something I don't usually take notice to. I'm going to see it's happening today. Yeah, don't see anything like that today. It looks all kosher. Although you want to see something that's not kosher. You can see in the opening auction at 10:04:19, there's one share traded. That's manipulation. That is a sign of manipulation when the last share traded during any sort of auction is one. That's manipulation. It is manipulation. Someone is trying to force the share price up or down. So yeah, they're putting in a trade, a bid, either buy or sell bid. So the last trade is one share. It has happened to me where a bid, I buy or sell bid, I put into the system, there's one share traded. So the rest of the shares are just hanging there, waiting to be traded. I hate it, hate it, hate it, hate it. Anyway, that's manipulation at its core. And share price did get up to 21 cents today. A little bit of selling, but that's okay. I have no idea what's happening here. That amount of shares traded over and over again. It could be a fund manager. Yeah, I don't have no idea. Why would they do that though? Same amount of shares. I don't know. I have no answers for you, Scott. I've never seen that before. But there might be a really logical reason for it. Don't know. Stu Percy, Kneppy moving out of Brisbane? No. Well, technically, I'm moving out of the Brisbane City Council, but only 30 minutes drive from Brisbane, and the drive is pretty good. Much better than my drive now, by the way. I hate traffic lights. I hate traffic and traffic lights. And my drive from where I'm moving to Brisbane would have very minimal traffic lights. It's mostly dual carriageway, mostly. I think there's a little bit at the end near Brisbane where it's not. It's one thing I don't like about Brisbane. They don't have enough dual carriageways into the city, particularly to the north and to the northwest. When I mean dual carriageways, I mean no traffic lights, like freeways. Freeways, not tolls, freeways. Anyway, so not real, but it's sort of in the bush. But I suppose where I am now, I'm 12 kilometers away from Brisbane to the northwest, and I am surrounded by bush. And it's bush that cannot be developed on. So a lot of trails around here. Where I'm moving to, one of the things I was looking for is somewhere where I can just walk to trails. Lots and lots of trails in this place. I'm going to just show you White Rock. Why not? I'll show you White Rock. Maps. Yeah, so there's actually a thing called White Rock. There's rocks with whiteness on them. Anyway, so where would it be? Somewhere here. So I bought some land somewhere in there, and yeah, and here, all this green area cannot be built on. It's some sort of preservation. I don't know what it's called. And there's all these significant Aboriginal things in there. Anyway, so a lot of trails in there, lots and lots of trails. Anyway, so that's where I'm moving to. And that was one of my key requirements. I wanted somewhere where I can do a lot of hiking, that sort of thing. And the other thing is, Centenary Highway, that's what it's called. So it's a short drive to Centenary Highway. And if I want to go into the city, it's an easy drive along along the Centenary Highway into either the M7 or stay on the M5 all the way to, I wouldn't get onto the Legacy Way, I think it's called. I'm not sure what it's called. And then I have to get onto the 32, which is through Toowong. What's these suburbs called? Auchenflower and Milton, past Suncorp Stadium, but it's not that long. Or I could go via the south, A7, Rockley, Maruka, Annerley. Very exciting. Just James Dean says, in case anyone missed this, trading update, 12th of December. I'm pretty sure I talked about this. And it's really weird because I noticed that, so Peter Warren issued a pretty negative trading update. Automotive Sports Holding released a pretty negative trading update. But Eagers Automotive chart looks pretty good. This looks pretty good. You have to look at the daily chart, not the weekly chart. The daily chart looks pretty good. So I'm thinking, is there something going on here where Eagers Automotive is not being affected by macro stuff that is affecting these other automotive places? I don't know. But the chart looks pretty good for Eagers Automotive. But thank you for that trading update. That's 2 months old. And Asha, I've already talked about that, hopefully. I think I've mentioned, yeah, White Rock. You can follow my steps if you really, a lot of development out there, by the way. If we go back to White Rock, where is it? So where is it? Whoop, I was a little bit away. So if you go to Ripley, so Ripley, a lot of development in this sort of area. Ripley, South Ripley. I think this is called, yeah, this is South Ripley. Might be even called Providence. There might be a couple of suburbs in there. A lot of development in that. I went for a drive yesterday through Ripley just to see what it's like. Yeah, a lot of development. So this is where they are opening up a fair bit of land. The good thing about White Rock is they can't develop to the east of me, which is good. And the other reason I bought where I am, the land, I only have one neighbor. Well, technically I have a neighbor to my back, but I only have one neighbor to my side. I don't like neighbors. And in front of me, there's no neighbors. It's just a sports ground, that sort of thing. Not perfect. I'll say this, not perfect. But if I was searching for perfection when it comes to land or somewhere to live, I'll be searching for eternity. Nothing is perfect. Astronomic says, Kneppy, what kind of pen are you using to make the dashed line? I tried looking for it in TradingView. I couldn't. Let's do that right now. Let's do that with a company. Let's find a company where I want to do a line. Let's do US 30-year bonds. Yes, let's do, oh, actually, yeah, let's do it. Let's do it. So it is trend line. There we go. So it's just the first one here, trend line. You might have to change it though. So you should be able to click on it. Here we go. So you can change the line, thickness and line style. So what do you do in the thickness? That should be self-explanatory. But in the line style, you can make it a straight line, no breaks in it, a dashed line, or you can make it a dotted line. So yeah, that's how you do it. So again, trend line, and then just change the, whatever you call it, you can even actually you can just click on this and then change it from a line, dash line to dotted line. So hopefully I've helped you, astronomic. Thank you, Dan Bag 230. Okay, that's what I'm going to do with your comments today. If you have any questions, any thoughts, leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.